Okay, so today we'll be analyzing GBPUSD 25th August 2026. So as usual, we start from the monthly. So this is the current month, August. So we delete all the lines and start drawing the lines afresh. If you come here, we have the monthly support over here. But this is a high volatile area. So the market to try to come to this level. So we also have another level here that the market can come to. The market can come to this level over here. So these are the two levels the market try to attack 1.3683. So if we go to the weekly, let's go to the weekly and see what's going on there. The only level we have on this weekly, all these levels are, we've marked them on the monthly. So the next level we have on the weekly is this level. This is the level we have. This is the level we have this weekly high. So this is the level they might want to take. So let's go to the daily. So this was the same last week, Friday. Friday made the high of the week last time. So which daily levels are we looking into? We're looking into these two daily levels here. This was when we're analyzing this. We're analyzing this particular candle, not this. It's only the new day. So this let's come here quick on this. So these are the two levels. This one would have been the best. I talked about this on my last video. So this is the level, this and this. So after marking our monthly, the other levels we are also interested in here is this level. Interested in this open close level and this daily level. These are the levels we are interested in. So the next thing we have to do is to go to the 4 hours, then go to the 1 hour. So the next thing we're going to do now is to draw our quantum levels. That's our institutional lines. So we've marked our New York time and London time. This is London time, this is New York time. So we've marked our New York time and London time. I also marked our institutional level from 1.36 to 1.37. So we are currently consolidating around 1.3625 to 1.365. These two levels is where we are consolidating during this period. So we are going to now check what happened. So we are just in consolidation all throughout. This is a consolidation move, but we are able to make some entries. As usual, we cannot make entries from 1 hour. So we are going to go to the 1 minute, 5 minutes, and 15 minutes to see if we can get a good entry. Coming at 7 o'clock, what did we observe? We observed something. We observed that this market was making. We have this liquidity here. Right at 7 o'clock, this was what we had. So I saw this liquidity coming at 7 o'clock and they refused to break out. They refused to take out this low. I told this low about from this low. We knew about this low yesterday. As well as they've not taken out this low, there is no need for price going further down. So they just refused to take out this low. What did they do? Right at London, they broke structure. So at 7 o'clock, I did not see any valid entry here. There would have been it's kind of an entry here. Let me see. Yeah, I saw this right at 7 o'clock, but they keep making this lower height and lower lows. So we tried to take some sales around here right at 7 o'clock. We tried to take this kind of sell. He's going for this low. 2 is to 6. So 2.2 is to 6. The market actually tried to. This was the entry I tried to take at 7 o'clock, but unfortunately I was taken out. So this entry. So immediately I was taken out from this entry. Well, this is what I saw right at 7 o'clock. What did I do? I took another entry here. I took a long position, right? When I saw the breakout, I took an entry going for 1 is to 3. So 10 pips targets and 3 pips top, 3 pips target. So 3 pip stops was 10 pip target. So I saw this. This is what I saw in 7 o'clock. Strong bearish action. We are having a strong bearish action here, right at 7 o'clock. Strong bearish action over here. So it broke the structure right at which time was this? 8 o'clock. It hit 8 o'clock. That was when it started. So I made an entry here. Let me widen this so you can see what I'm saying. I made that entry here right at 7:30. That's when I made my entry. So the price tried to come. This was my TP, but I don't know. Some markets can really hit 8 o'clock. When they hit this level 1.3625, they reversed the price. So I took another entry from here. I never knew I would be triggered. They took out all this liquidity. Really, they took out this liquidity. They gave us another opportunity to enter. That's why I took my entry. I did not see anything here to enter. I did not see any price action here to enter. I just took it from here. I would have taken it here also. At this point, I would have stopped price, but I just took it from here again. Just a rough estimate. I just did it. No confirmation entries over there. So what I saw again was when they came, they reacted from this other block here. This is a strong other block. That's why they broke it with volume. Anytime they break anytime markets or the chart breaks another block with a huge volume, just know that there are a lot of sell orders here. Anytime you see a huge volume break of another block, there are very huge huge orders, huge sell orders here. That's why my sell order was part of them, so they took us out with speed. So when they came back to this other block, what did they do? They broke structure. I used this structure break in the 5 minutes. That's what I observed. So let's go back to the 1 minute to see what happened on that structure break. So they broke structure when they took out that order. That other block was a very huge other block. So when immediately they broke out, they took structure. Besides, I knew that okay, they were coming over to this 1.365. So this was around 9 o'clock. Around 9 o'clock. What did I observe? I observed a break of structure. So I had to go to the 1 minute to see what was going on there. Understand? So what did I observe? I observed this break of structure. Immediately I observed this break of structure, I started looking for entries. Can you see this swing point here? That was where I made my first entry from. So I took more entries. When I saw this break of structure, I took more entries, targeting this level. Going for 1:3. This was how my entry was for this. It was based on this swing point here. So it almost took me out. And I also had another entry over here, just in case that it took me out. This one was just coming to this liquidity zone. So that was how I made my entry. So I made basically 2 entries, one coming here and one going all the way to this quantum zone, because the market was highly volatile. So you can see we had a very strong resistance support level here, and I was watching this level also. I had basically 3 entries around here. Also, that simple break of structure. When I saw this break of structure over here, I started looking for buy orders. This level was a problem, was a very big problem. This level would have reversed price. But what did they do? They broke out of it, used it as support. We had another strong level here. So we just keep having all these levels that can reverse price. We have another strong level here, this level also. So when I saw this structure break over here, I wanted to take another entry going all the way to this level, but I refused to risk it because I already have this entry going there. But if I did not have this entry going there, I would have taken another entry here going to this level, because this was a valid break of structure. They broke it with body correction retest, but it was very fast. They even came back to it, tried to hit it again, but they couldn't. So what happened? My main target would have been all the way to this level. All these levels are liquidity zones. My main target would be all to this level. That should be my main target. But I just like taking out my targets around this quantum zone, because they can actually stop price. That's why, if not, I would have taken exits around these levels. So what happened right as this when maybe we hit 11 o'clock, I knew that an issue is about to to happen. A strong liquidity, a buy side liquidity here. We have a buy side liquidity here. We have a strong buy side liquidity all the way to this level. The market was making higher highs and higher lows over here. So what did they do? They broke structure. This low you are seeing was not made all these highs here. They broke out of this structure. You see this structure here? You broke out of this structure. That was what happened. They broke out of this structure. This is a structure plate. And they're targeting this low here. Can you see what's happened here? Higher high, higher low, higher high, higher high, higher low, lower high, lower low. So they broke this lower low here. Immediately they broke this lower low here. I knew that I took a sell from this level. I took a sell from this level to this level here. I took a sell from around this weak level or around this body level, going all the way here. And this was my major target, this level. I'm not interested in this level yet. So what happened was I took 2 more shots. Because whenever there is a break of structure, just know that there's another liquidity, meaning they are trying to target on that day. So I took another entry here. You can see this is 5 pips target and 1.7 pips stop loss. Approximately 1 is to trace this. It would have taken me out. I just make sure my stop loss covers this week. I also had another entry because I did not trust that first entry. I'm not sure that first entry. So I had another entry going here all the way to this level. This one was approximately 1 is to 2.5 or 1 is to 3. So that was the dynamics of this short you're seeing here. So after that, what did I observe again? I observed another opportunity for more shots around here. So immediately we broke out of this level. My next target was here and here. But this was a New York time. So we've entered New York time. So I was like, okay, since we've broken out of this structure, this is but I saw this trend line also over here. When I saw this, this is New York. We've entered New York time when there's a lot of money in this market. You understand? So I started looking for buy entries. I wanted to take a buy entry around here, but this level was just too close, and we're having this. So I tried to take some entries here. I had 2 entries running here because this was New York. I had 1 entry going all the way to this level. To this level you're seeing here. The very strong level that normally stops price. So I had 2 entries running. I had an entry going all the way here, and I had another entry going all the way here. Going all the way to this level here. Understand? So I had 2 entries going here. Because this was New York and I was expecting a very huge pull to the upside. So they took me out on those entries. Unfortunately, I was taken out. But I saw something here. When they made this move to the upside, they actually triggered us in, but they made a new low here. So immediately they made this new low here. I took an entry going against I didn't even expect it to work out, but that was what I told you. I like taking most of the time I like taking entries against my positions, because I took an entry going all the way to this level, going all the way to my stop loss. Can you imagine that taking an entry going against my long entries? That's how I normally trade. So I took these entries here. I came here. This market refused to go to this level. Instead, what they did was they swiped liquidity here. You see the swipe of liquidity? Immediately I saw this, I took 2 more entries. That was the beauty of trading. And you see how manipulative they are. This was at 14 o'clock. That was why I told you that 12 o'clock always tries to manipulate. When this market broke this structure here, I took an aggressive entry. This is an aggressive entry, not confirmed. 2 aggressive entries. So you have to understand the difference between aggressive entries and confirmed entries. aggressive entries are some of the time they work out, and most of the time they don't work out. Most of the time they lead to a lot of losses. So this was an aggressive entry. I took an aggressive entry because we have not seen a huge breakout. You understand? I just saw this. This is an internal structure breakout. So when I saw this internal structure breakout, that's why you saw my first exit was here and my next was here. This is an internal structure breakout. I also went for the external structure. Why was I going for this two structure? Because this is New York when a lot of money comes into the market. So when I saw this breakdown here, this lower lows and lower highs, that's when you saw me took this entry to recover these losses here. So when I saw this liquidity swipe and still break of this structure again, I took two more entries, going for this internal structure again. I'm going for the main one because I don't have any entry move going to those levels. So I took two more entries. So this is how the trading session, because when I saw this structure break, I just took entries going here. This is switch to 6. And I took another one. Going all the way to this can you see this maybe around here, so let's say 12 pips here. So for 1:3. So two more entries we are taking here also. So what did I see here? I said when we took out of this, these are the two entries I took right at 14 o'clock, giving me 6 hour total and plus 14 o'clock. Two take profits in total. So what did I observe here? What I observed here was we tried to make some. We are just making lower lows and lower highs, lower lows and all. This level tried to hold because this was a very huge and this was a huge resistance level. So we tried to use this for support, but instead we didn't. It did not work out. This is resistance. So this is a resistance terms of what did they do? They broke out of it. I knew that, so they are coming for this liquidity. There's liquidity here. You can see the liquidity. This other block. This other block was where they were going for. They were going for this other block. So I started looking for entries that were aligned to this other block. So I saw this pullback. I had an entry here. I had two entries here. The market still took us out. This market was us, and these were a kind of aggressive entries because it was just clearly from an order block. You understand? I had one going all the way to this level. Or is it going all the way to this extreme point? I was like they're going to take out these highs. So I wasn't interested in this thing. So I just took entries going all the way to this level. I'll say 15 piece. But I don't like taking entries at cold market. So I took this kind of entry. And I went for this thing 1:3. Why did I take an entry here? This is another block. So this other block broke the structure. So we are expecting two entries here. So I took two entries. Normally, this is what I normally do. You have to be transparent because this is how I trade. You understand? But this is I took this one. This one was going to this daily zone. So I was like, okay, yeah, they're about to take entries because this was inducement. Can you see this is inducement? Triggered us in. So the entries were even more in these weeks. There are weeks here. So it was even higher than this level because I was more bullish than bearish around this. So I took these two entries. What did they do? They came and they took out our stop loss. So we lost 2 hours over here. 2 hours we are lost. Now we are trying to take entries around the other block. So what did they do here? They just this was liquidity. This is a trend line liquidity over here. I see this trend line liquidity. These three levels are your trend line liquidities. So what did they do? They took out this liquidity. They just swipe this liquidity. Swipe a lot of buy side liquidity. Broke structure, which is this is what I want to see. This is what they call confirmation entry. These are aggressive entries. This entry you're seeing here is aggressive. I'll start explaining aggressive entries and confirmation entries. I think as a beginner, you should go for confirmation entries, not aggressive entries. Aggressive entries will give you stop loss. It's only people that are more experienced that uses aggressive entries. Because this is an aggressive entry. It's not the entry wasn't good. They never look at this. Even though you look at this inducement, let me just show you something about this inducement. Let me shift this to the other side. Now look at this inducement. When they created this inducement, they did not break structure. So that was why immediately they entered, we thought that they were going to move up, but so it just took us out. And so immediately they described these liquidities and broke structure. Oh my god, I saw that okay, this is it. These people are about to keep going up. What did they do again? They just came here, created this law. I think so. What did I saw? I saw something. I saw something here. I saw that okay, these guys are making a series of. I saw this. This is what I saw. I saw this. These two guys are too extended, so I can just say I saw something like this. So something like uh, something, so a trend line, a kind of a trend line that is that is around this. So you understand. So I'm seeing a trend line, and I'm seeing a kind of another block around here. This market is. So this is the origin of where this breakdown started from. So I'm seeing something like this where they're making wild and wild. But what did I see? Break of structure. When I saw this break of structure, I knew that okay, these guys are about to take out this and also take out all these levels here. So what did I do? When I saw that break of structure, so this market was making this market came here, broke. First of all, it gave us it broke structure when it took out this liquidity, broke this structure here, came down again, came like this, broke. It was making higher highs and higher lows. Can you see that? Higher highs and higher lows. This is an internal structure. This thing you're seeing here is an internal structure. This is so I knew that. What was the time here? The time here is around 5 o'clock. The time here is around 5 o'clock. So we had more entries over here. We had this entry here. This entry here would have, because this is higher highs and higher lows. So I expected an entry going here. This 2:7. 1:3. So I have two entries. So will I see three balanced entries over here? I had another entry going all the way to this level. I was expecting this level to stop price somewhere around here. So these are confirmation entries. They are not expected to fail. Understand? These are confirmation entries. So I had multiple positions over here. I also had another entry covering this swing point here. Also covering my trend line. This is 1:3:10. But why I took this entry, I took two more entries there just in case this market comes down with high force and things out. It was not my main exit was here. I like taking two. I don't like taking. I just like taking two exits. I might decide to take another exit going to this daily zone, but the only when I saw this taking out, that was when I started looking into taking out this daily zone. But this was my main target here, not this. This was my main target. But there's this high possibility that this market will hit here. But this was the origin of this breakdown. So it's an internal structure. I used these trend lines to denote internal structure breaks. So these are what I had. I had entries based from this. Can you see this swing point? I also had entries based on this swing point in case this one fails. So I had two entries, but I knew that this swing point you're seeing here, this swing point can stop price. So can you see? I couldn't take an entry around here because if I had taken an entry around there, I would have been stopped out. Even if I was taken out in one of these entries, I would have still been recovering. I would have still recovered my losses. But that's how I take entry because I knew that they might target any of these swing points here. And even if I will have another entry, I would have had another entry going all the way to this level if I was being taken out. And when you are trading this thing, you will be seeing where you are being taken out and where you can recover. So when I came here also, I saw opportunity for more entries. When I saw this structural breakout here, I know that they've taken out this internal liquidity. So they are going to external liquidity points. So what did I see here? I saw opportunity for re-entry here, but this one failed woefully. This one failed without so this was higher highs, higher lows, higher highs. We tried to take some entries here, going all the way to level here. So I had this. We can see the trend line over here. But even if we were taken out, we had another exit just there. So this is what I tried to do. And I saw this move here. Also, we also had some just right. I just remember that right at the London time, we had more aggressive entries around here because this market made an exponential move. We created there was fair value gaps here, so we tried to enter around those fair value gaps. We have two entries here, which went on loss. So we had two entries here, which went on loss. We also had more entries here, just backing up the because of these liquidity zones here. They also went on loss again. So we had multiple losses at this point. We had multiple losses at this point. When I saw this thing, I tried to take some sales just going here, even though I was taking buy. So we had multiple losses. I also had some wins, but when we broke out of this level, we tried to take some shots over here also. Right at tried to take some shots, 6 pips, yeah, and 2 pips. So we had 1, 2, 3. We had like 4 losses. 1, 2, 3. One. We had multiple losses here. 1, 2, 3, 4. 4 losses. So we had multiple losses here. Because this market would have bought from this. There's another block here that broke the structure here with a fair value gap around here. But it failed. So it failed. Hopefully, even at 20 o'clock, we still had we had a recovery entry. We didn't hit this daily sum, but we had this equity sum which we targeted. So thank you for watching and have a nice day.